Will the Fed make things worse when it meets next week? Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Federal Reserve policymakers formally meet next week. The consensus is that they'll raise interest rates by 25 basis points, or 1/4%, as part of an effort to curb inflation. Weighing on the central bank is how to calculate the impact of the war in Ukraine on the economy and prices. And here we get to the danger the Fed poses to the economy and financial markets. In coming months, the Federal Reserve will mistakenly shove the economy into a slowdown and not kill inflation. Here's why. Like all too many economists, those at our central bank believe the way you control inflation is by slowing down the economy. A cooling economy, in their thinking, means people will buy fewer things, which will take the pressure off prices. Less demand, lower prices. They want less growth, but they also, for political reasons, don't want a recession whereby the economy actually shrinks. That's why all the talk of aggressively raising interest rates has gone by the boards with the Putin invasion of Ukraine. The uncertainty and disruptions that the conflict is creating is slowing things down. But this will eventually dissipate. And that's when the Fed will really harm the economy. Contrary to what their economists think, economic growth does not create inflation. Undermining the value of the dollar by excessive money creation does that. That's always been the case in the U.S. And the Fed has been on a money printing binge. Banks are loaded with cash. So-called base money, dollars in circulation, and money banks have on deposit at the Fed has doubled in recent times. Like a weak dam with excessive water building up behind it, this overabundance of money creation will eventually flood the economy, which will mean rising prices, even if we get some of the supply chain bottlenecks behind us. Despite years of disappointing real-world experience, the central bank still clutches to the fantasy that it can constructively guide the pace of the economy, even though the U.S. economy is hundreds of millions of people engaging in billions of buy and sell decisions each day. The hubris is mind-blowing. The ugly conclusion is this. At some point, the Fed's activities will inadvertently shrink the economy and simultaneously fire up inflation. The last time this happened was back in the 1970s. What should our central bank do but won't? First, stop manipulating interest rates. The Fed can never guess the right price. Second, start reducing the amount of base money by reducing the size of holdings of securities. The Fed has continuously misjudged what has been happening in the real world in recent years. Sadly for all of us, it'll be hitting the rocks of reality soon enough. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.